Hi there traders, this is Steve Miley for FX Explained and our regular MacroWatch weekly update looking at the major geopolitical, fundamental and macroeconomic events which have shaped the last week of trading and impacted on financial markets, and looking at the week commencing the 13th of January 2020. What have we got coming up? Well, the beginning of 2020 in here has really been impacted by the heightened tensions in the Middle East, with the US airstrikes killing General Qassem Soleimani in here, the Iranian forces chief in here, and that heightened tension has seen what we saw as a risk-on scenario going into the end of 2019 with a strong Santa rally, a strong holiday season rally being rejected at the beginning of the year, initially by the killing of General Soleimani, and then the retaliation by Iran, hit it with airstrikes aimed at US troops in military bases in Iraq that we saw last week, in the middle of last week. That sent riskier assets plunging lower. Global stock markets went significantly lower, dropping by 2% Wednesday evening after those airstrikes, 1.5% to 2%. We also saw a big move in the FX markets, Forex markets, the Japanese yen surging higher, the safe haven Japanese yen surging higher, sending US dollar versus Japanese yen and Japanese yen crosses significantly lower. And then we saw a flight to quality into safe havens, into bond markets, into gold, sending the precious metal to multi-year highs, whilst oil unsurprisingly also spiked higher. The risk currencies, the Australian dollar, New Zealand dollar, continued to sell off that we saw from the beginning of the year into the middle of last week. However, it transpired that there were no US casualties, that Iran had forewarned of the attacks and targets to the US, and also both Iran and Donald Trump have appeared to look for a cessation and a de-escalation in the conflict, both making somewhat conciliatory statements. This then saw riskier assets rebound significantly higher back on Wednesday and through into the end of last week. Global stock averages moving to or close to multi-month and multi-year cycle highs, whilst US stock indices hit new records at the end of the week. Dollar yen also surged back higher, close to multi-month highs and the important 110 level, whilst gold and oil retreated back lower. On the data front, we also had the global market purchasing managers index data last week, which broadly beat expectations for the major global economies, whilst the US Institute of Supply Managers PMI data was also better than the consensus, again fueling that recovery, refueling the underlying risk on theme that we had from late 2019 now into 2020, with that early 2020 volatility for now seemingly behind us in at least the short term. We then moved to the end of the week and the non-farm payroll employment report from the US, which was slightly worse than anticipated, slightly missed the consensus number in here. Not aggressively missing, but slightly missing. And that was an excuse for some profit taking. So we saw equity markets dipping back lower, dollar yen pulling slightly back lower from its recent highs from below that 110 level for dollar yen. So markets a little bit cautious going into the very end of the week, but underlying risk on theme very, very much intact. Let's take a look at the week ahead. What do we have coming up in here now for global markets? Well, clearly the focus is going to continue to be on the Iran-US conflict and looking to any kind of either further conciliation and de-escalation, or there is still potential obviously for a re-escalation of that conflict. So we're certainly going to be keeping our eyes on that. We're also going to look to the fact that we're expecting in here, going into this week, that the House of Representatives are going to transmit articles of impeachment to the Senate, which will allow the Senate impeachment trial to be get some kind of agenda and potentially start at some point going into February. As we've continued to stress, though, a 2/3 majority of senators is required to convict Trump on either of the two articles of impeachment, which is unexpected given the Republicans' firm control of the Senate. And then what do we have on the data front going into this week? Well, we have the UK manufacturing industrial production and GDP data on Monday, Chinese trade data and US CPI probably the standout for the week on Tuesday, UK CPI, EU industrial production, US PPI, US and the US-China Phase 1 trade deal expected to be signed in here on Wednesday, although probably looking for little impact from that. We have German CPI and then another standout point, US retail sales on Thursday. And to end off the week, Chinese industrial production and GDP, UK retail sales, Eurozone CPI, US industrial production, and then on finish off the week on Friday, the US Michigan Consumer Sentiment Index. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.